why you might one day use stablecoins in place of credit cards or banks. So the explanation was incredibly simple. Like when you purchase something, it gives you the option of credit card, debit card, PayPal, Apple Pay, buy now, pay later, or whatever. They're going to be adding the option for stablecoins in there.
Now, the Bitcoin ecosystem is deflationary. The Federal Reserve notes are inflationary because you're not creating more and more Bitcoin. Well, as Bitcoin rises in price, you have stable coins that need to have collateral backing as they're created out of thin air. And what do they use? They use
treasuries.
And so now you have a situation where you don't have, you don't need the Fed, and you don't need the bankers, and I don't think they could stop it.
Good afternoon, everyone. Bob Kudla back with me this month to talk about seasonal rotation. Are we going into a weak period? It looks like tech is starting to unwind, where a lot of things are moving back into assets, hard assets. Volatile time of the year. End of the year generally screams up, but what happens right now? Trying to look around the corner. A lot of talk about stable coins using this instead of using what is traditional, like federally issued notes off the the printing presses of a private institution and a private bank. The Federal Reserve is definitely a private corporation. It has nothing to do with our government. Yeah, we pay them interest. That's why your money buys less every year. To talk about this and more, we're going to leave, I guess, I would call it seasonal rotation. And also Trump wants to issue the $500 bill in a physical currency form. So that's interesting in itself. So those of you saying, well, they're going to do away with cash, I would say perhaps they are if they move to stable coins. But at the same time, Trump's not going to be issuing a $500 physical bill if we're going to do away with cash. So we're getting all these mixed messages here, market tops, market bottoms, 4-year peaks. So let's just try to dissect into it. And hopefully, again, the crystal ball bending around the corner. So Bob, thank you for joining me. And we're going to unwind the yarn on this rumor mill out there in the finance world.
Yeah, I mean, thanks for having me. So let's talk seasonals first. So August 15th, October 15th is a weak period in the market. A lot of reasons for that. We could discuss it at another show, but it's enough that you need to pay attention to it. This year is a little bit hairier, if you will, because it's you're going to have the Fed probably lowering interest rates right smack dab in the middle of it. And that's counterintuitive argument too, because the stock market follows the Fed funds rates up and down. So as the Fed is lowering interest rates, the stock market actually follows it. So you may get an initial euphoria, but that will quickly fade, and you'll get a harder push down into the market into the towards the end of October. I'm in agreement with you that at this point, unless the wheels come off the apple cart, we'll probably see a rally into Santa Claus at the end of the year. Now, what is going to move where is that tech. First of all, the Bitcoin ecosystem, that's what I call like the MicroStrategies and the Squares and the Sarks and all those people. You're already starting to see that stuff weaken. MicroStrategy has already fallen 40 or 50%. You're starting to see the Bitcoin starting to stumble a little bit. That's natural. This is the time of the year for it. MicroStrategy and Strategy a little bit more so because they had a premium to Bitcoin that's being washed out right now. So I tell people, if you're interested in that space, just wait till the middle of October and let that play itself out, and you can get back into that for the move higher. I know you're talking about potential October high, but I think a lot of these seasonals have been kind of messed up this year because of all the derivatives and all the flows and all the liquidity coming in and out, that I think you have to pay more attention to, what the Fed's going to do and global liquidity for Bitcoin. Now, what we think...
Bob, if I could step in there, the reason he just said that is because I was talking about the traditional 4-year cycle. When we talk about cryptocurrency, we're generally it'll scream up exponentially into this peak. And this peak was forecast, I'm not going to be exactly down to the day or the week, but somewhere in around the end of September into October. Right. So that's what I was talking before we started. Well, what about this peak on the regular 4-year cycle that usually drives prices to infinity for a minute, and then it always crashes back down. So
yeah, and that number was like 180,000, I think, and we're nowhere near that now. Can it jump up, do that November, December, and hit the high? Yeah, but I'm just saying, just put all this stuff in crayon right now. Now, where do you stick your money in this environment? Well, we've been building up a bond position up now for the last 18 months, and healthcare is getting a bid back again. So you're starting to see we've done some trades in that area, specifically NVO, which got just totally decimated after their GLP drug went off patent. But there's some nice trades in there. Forget the whys and wherefores of the drug itself. And then biotech is starting to get bids in it too. That's a trickier one because it's news generated a lot of times. But we just did a trade with VRCA Pharmaceuticals. It was actually a quick day trade. So you're starting to see some momentum coming in those names. And then, believe it or not, even though Trump wants oil prices down to zero, is that there's been an over exuberance in shorting the energy names. And typically when everybody's on one side of the boat, Dave, you get a snapback. In this case, it could be a snapback rally. And so some of these integrated oil names look very interesting. And so those are the trades that I would say you could consider. And then gold and silver miners have just been on a tear. And one thing that you have to bear in mind too is that Trump has the ability, if I can go to a side for a second. So Trump has three cards he's playing now for the budget, right? One is that he's trying to doji out expenses that shouldn't be there anymore. The number two is that trying to create an income stream from tariffs. And the third thing is that he has a chance to do a windfall accounting that he can create bonds from, not bonds from, actually cash, by repricing gold that's sitting at Fort Knox. And that right now, where the price of gold is now, can be anywhere between, $600 to $800 billion of a bump up. There's precedent here, and he'd be the fourth person to do it. Okay. And so it's already been done 3 times. So it's a thing. Okay. And Trump has that in his back pocket. So he literally can go into the midterm elections by saying, I cut the deficit in half, or I cut it by 3/4. He also has that cash now to be able to basically, and we'll get into our next thing, obviate the need for the Fed to exist. This is a really interesting thing. So the Federal Reserve, you attack it head on, presidents tend to get assassinated. Well, I think they tried to pre-assassinate Trump and missed. And now you have Scott Bessent in there. And so, you reprice gold, you can buy down debt, right? And Bessent's been doing that with the tariff money. He's been buying down bonds, okay? He can take the gold money and buy down more debt. Or he has that cash on hand where he doesn't need to borrow money. And so you have an opportunity now with stablecoins, which I think is going to help Bitcoin out, Dave. They're going to create this flywheel where, people want to trade in the Bitcoin ecosystem versus the dollar ecosystem, right? Remember, the dollar that's a private entity, right? The dollar is not the US dollar, it's a Federal Reserve note, right? So you could trade in Federal Reserve note, or you could trade in a stable coin through the Bitcoin ecosystem, right? Now the Bitcoin ecosystem is deflationary. The Federal Reserve notes are inflationary because you're not creating more and more Bitcoin. Well, as Bitcoin rises in price, you have stable coins that need to have collateral backing as they're created out of thin air. And what do they use? They use
treasuries.
And so now you have a situation where you don't have, you don't need the Fed, and you don't need the bankers, and I don't think they can stop it. And so now, you have China that wants to do it. All these people are realizing, saying, hey, we can get off this inflationary geometric road to ruin by using these stable coins and Bitcoin, and also impose some discipline on the governments around the world. So it's really fascinating. You said something else about using stable coins instead of credit cards. I haven't studied that, so I'm not really quite sure how that would work. But it's intriguing that they're creating a second off ramp, to the Federal Reserve System, because I think everybody realizes the fiat system is about ready to go bust, and you need something. And even Trump and Bissett said that Bitcoin is actually going to save the United States. So
how would you trade on that? Being over at Trade Genius, like how would you, actuate some of these trades or take advantage of that information or understanding how the market's moving? That's saying up at Trade Genius there.
Oh, I'm buying all the Bitcoin ecosystems as you know, because you're in the room all the time now too. So Dave's not a hair club member; he's the president. But Dave's in the room. You can see that. We just look at our algorithm, and when the algorithm says, "Hey, get back into MicroStrategy, or get into Bido, or get into YBTC," that's the way you take advantage of it. And so that's the Bitcoin ecosystem. You can directly own Bitcoin if you want. I prefer to do everything inside of the stock market, but people could trade Bitcoin directly that way too. But bear in mind, it needs to pull back, and so it can get its energy into the end of the year.
Yeah, no, let me ask us a quick question on that. Somebody had sent a question in on our last month's talk and was asking, for swing trade, would you use 2-hour, 4-hour, or 6-hour charts?
I use 2-hour personally. Well, it depends what you define by swing trade.
Yeah, and I didn't understand. I understood the question, but they didn't give enough like real information for the context of exactly what they wanted to achieve. So I just
the longer you want the swing to be in existence, the longer the time frame. Like I trade, my average trade, I'm in and out 3 days, so I'm using a 2-hour chart.
Okay.
But if you want to be in something for a week or so, 4-hour chart. If you want to be in it for multiple weeks, a daily chart. But now, having said that, you also need to expand your stop and target range. As you know, when I give a trade out, I put a stop and a target in there, and they're reasonably tight, because if 3 days I can make 3 or 4% on my money, you can do the math for what that looks like annualized, right? So if you want to be in a daily trade, and it falls 3%, well, if it was a 2-hour trade, that would be considered to be an out for me. But if it's a daily trade, you may want to give it 10%, 15%. You got to let it breathe if you're going to hold it for multi-months, to look for a trade that's going to make you 10, 15, or 20%. So that's what I would suggest to people. But Trade Genius, the trades that I put out in the room every day, is I put them out for a 3-day. Now, as you know, yesterday I told people to get an Oclo 71.55. This morning, I think it hit a high of 77. We moved our stop up to 75 and got out. So, you made 4% overnight. I consider that good living. And so those are the kind of trades that we look at. But I was prepared to be in it for a couple of days. I didn't expect it to move so strongly, but it was positioned right. The algorithm told us to buy it, and I suggested it out to the folks. And not just that, people came back to me, Dave, and said, well, is there anything else we can buy? So, well, the uranium space, usually they travel together. We own Quad U, which is UU. That's up 15% today. We own that. Okay. And, but SMR was up as well. And I didn't check CCJ, but CCJ, UEC, Oclo, all these guys seem to move together. So those are the kind of trades that we put out. And that's what the algorithm does. But we look at 2 hours for our trading.
Okay, remember that's tradewith2030.com. I'll put that link below so you can just click and go. Check out what Bob has over there. Like, it's true, I am in the rooms there, and they're quite fun, just making some jokes about things and, getting some, sniper buy opportunities or sells, and especially the chart and the algorithms you got on the charts really will kind of wire in where if you're going to get a rip or sell, like an immediate, wow, that's a great opportunity, or then on the inverse, like you need to sell this thing immediately. Like you're getting the signal, like dump this thing like a hot potato. Yeah. So either way, you can take a look at what people are writing and talking about, or you can actually take a look at the charts and what the algorithms are doing and blend those two together. It's quite a
And in addition to that is now TradingView lets you do what's called group alerts. So you can group your whole watch list against, like Dave was talking about, rippers. That's one of our algorithms. The snipers, an algorithm. The rangers, an algorithm, the super histograms, an algorithm, and you can just set those up as alerts. I have them sitting here right now. I'm watching them all day. I can't watch 150 stocks, but the computer can, and it alerts me as to, hey, you might want to take a peek at this, and it pops right up on your screen for you. And so in addition to me giving stuff, or you just need a chat room, you can set your own alerts up, and you can set them up for multiple time frames, whatever you want to do, and just trade it. And you can see our track record is pretty strong. So, as of today, we're right now 66.43% is the win percentage. These are the trades that I post. We've done 1,546 trades in the last 4 years. 1,027 of them are winners. Our annualized out on an average of a 3-day trade is 77.82% annualized. So, and I tell people there's slippage in that number because you're obviously now 100% invested in my stuff on an average. But I tell people, hey, just cut that in half. I don't know. I could live on 35% a year on a long-term basis.
And depending on what's treasury notes, forget that discount yield rate. Sheesh. She's like, invest $1,000 and get $3 at the end of the month. Like, woo, $3.25 or something.
You can make good money with these systems, and these are well-known names. You're talking Palantir, you're talking Oklo, you're talking names that have a lot of liquidity behind them as they're trading it during the day. And so, you're not trading on the small penny stuff that makes the numbers look better. You're trading good, meaty companies here that you could trade day in and day out.
Right on. Hey, I have an answer for you, because the article that Bob was referencing, talking about how do you use stablecoins to buy things instead of credit card, it was off Yahoo Finance. It was called "Why You Might One Day Use Stablecoins in Place of Credit Cards or Banks." So the explanation was incredibly simple. Like, when you purchase something, it gives you the option of credit card, debit card, PayPal, Apple Pay, buy now, pay later, or whatever. They're going to be adding the option for stablecoins in there. They're going to just add that to their range of stablecoins. So they think over time, just the general amount of people are just going to roll over to the stablecoin payment, especially if they're able to use that to get some yield on it in a different platform, like the USDC or the Circle or the Tether stablecoin. Not going to be actual interest on those, but they're already explaining to people in this article, I thought was well written, on, there's yield farming out there and how you even deposit stable coins to earn interest in like decentralized platforms. I was like, wow. And they're talking about that on regular, like vanilla economy news. Like, there is an enormous, I would highly encourage anybody to look at your finance. 1 out of every 5 stories is a crypto story now. It's just the way it's rolling through. I mean, the usage of it and everything. So, where does it go? Treasuries, they have to buy those to be able to issue the stable coins. Like, you're talking a flywheel of just infinite money loop here of, well, I would say it's infinite demand loop that then creates the money versus money itself.
Yeah. And look, there's a lot of people out there that hate the Federal Reserve that would love to have competition, and what I find really interesting is that, when they created the Federal Reserve, did they say there can't be competition to it? So it's really interesting that these stable coins are going to actually be probably the death knell of. That's why those guys were so into trying to get XRP up and CDBC up. They also put legislation out there that there won't be a central bank digital currency either. So they're not going to allow the private bankers to lock you into their system, like being on the company, the company store, if you will, where you got to buy stuff at a premium. That's all the Federal Reserve is. You have to buy dollars at a premium because they take out their VIG every year. So I think it'll eventually, I look at Bitcoin as being very deflationary in a good way. And so I think Trump and Bissett has the plan, and they can be very passive about it. So these guys, they don't have something to fight, if you will. It's just going to be organic. So I think it's going to be really fun.
Well, let me ask you then, how does that affect valuations of, like you just mentioned, all these multi-billion-dollar cap companies on the markets? If stablecoins start to eat in, like, how is the valuation of the companies going to remain the same if there's a second competitor to this? I mean, right now it's in its infancy, so it's not going to happen today or tomorrow. But once it gets into 25 trillion worth of stable coins or 50 trillion, it starts to get some, movement behind it in a few years. I mean, how is that going to, like, which one will it be valued in? Because it definitely, I just seeing that seems like we've just shifted the financial system again, as we did coming off the gold standard, or, as we did when they
Well, I think
no
instead
longer
of
could own gold in America after the confiscation. It's like these different segments, when the Fed was formed itself in 1913 at Jekyll Island.
I think it'll be we'll have a competition for the Federal Reserve note. Maybe we'll go back to US dollars. You remember how we had the dollar gold certificate, the dollar silver certificate? We may have the dollar, for lack of a better word, the dollar Bitcoin certificate. It'll be more than that. You're going to have, gold will be in that mix, silver will be in that mix. You notice Trump's creating these strategic reserves of metals, right? So it could be a mix of that. It could be a claim against the timber in the United States. There could be a million things that could be used to collateralize a new note versus a fiat Federal Reserve note. But I agree with you, and it'll be priced in that note too, just like you could price Intel in dollars or in yen, right? It'll be priced in dollars, and it'll be priced in this new certificate, and eventually then the Federal Reserve note goes away and that gets supplanted. I think that's what's going to happen.
This is not a toothpaste. It's a revolution for your teeth. Remineralize, strengthen teeth, all natural ingredients, essential oils, minerals, salts. Alfa Vedic Dental Solutions System. That's alphavedic.com/civilization. We're always trying to bring you the best products here that we think will enhance your life, especially if supply chains break down further, or if there's some disruption in our lives here. It seems in the news more and more possible, but hey, who knows? Maybe it's a mind game. But what is not is keeping your dental health up. And not a lot of people are talking about this. We always see the storable foods. But what about dental care during these same emergency situations? Will your toothpaste eventually run out? Well, if it does, then what? So like I say, this whole micro gut biome is driven by your oral cavity first. So take a look at what they have, alphavedic.com/civilization. Every purchase you make helps keep our live radio show and podcast on air, bringing you more information just like this. alphavedic.com/civilization. That link is in the show notes below. And as always, I appreciate your valuable time and joining us in this ever and most important conversation as we move forward in our world. Okay, so silver's sitting around 39 right now, which is nice for everybody who got in when it was a little bit less from that. And gold's, still in the $3,000 range. Now, you'd mentioned earlier the repricing for Trump was trying to do the repricing on the gold reserves. You have any idea what that reprice might be? And I've seen a lot of wild numbers, anywhere from 5,000 to 10,000, 20,000. I mean, it's kind of in there, but I mean, in realistic fashion, it's not. Maybe I'm just naive. I don't think they would reprice it at 20,000. That would make
no. They can't reprice gold. They reprice the value of the gold holdings in Fort Knox, and they take that differential to where it's priced now, because it hasn't been repriced since Nixon. And then they take that and they put it right on the treasury as cash. And so, because you could create dollars incommensurate with the value of the gold you have in Fort Knox. And so that's what he'll do. And I think that's what Trump's going to do. I think he's going to create additional storage facilities so that he can lay claim to create money from the mint versus from the Federal Reserve. And so, so I think gold 5,000 is not out of line. And remember, it's not a one-time thing. If gold goes from 5,000 to 10,000, Trump can do it again. And he could just keep paying down the deficit this way. And if he drives interest rates down to zero and he does this, he's saving the country $200 billion a year in servicing costs. And so, you can then reinvest that if you want to keep the debt level the same, or you can create an environment where then the dollar or the stable coin dollar and everything gets stronger. and then all the money in the world is going to come flocking into the United States. It's a really clever approach that he has here, and thank God he has control of Congress and the courts, that he can just keep pushing hard. And that's why the mistake he made this first term was he wasn't aggressive enough. And just now he's aggressive. And so he's getting all this stuff locked in. I think all this stuff's in play. I think we'll see interest rates back down into the low 1s and 2s again. And I think you'll see deflation actually show back up on the books. And I think they're just going to continue to drive this process of creating deflation in the economy, because remember, deflation helps poor people, inflation helps rich people, and Trump's a populist. So if he can walk out there and start crowing the next election cycle that I reduced your rents by 10%, I reduced your healthcare costs by 10%, I reduced energy costs by 20%, because I got rid of illegals, I got the government more efficient, I broke peace out in the world. He cares about that more than some, fat cat guys on Wall Street, trying to drive stock prices higher. So I hope he succeeds.
Yeah. So last question here for you. If war breaks out in Europe between Russia and Europe, and the U.S. stays out of it, because we've already seen several statements that Trump's like, no ground troops over there, bro. Nothing. We're going to, they might supply some weaponry, no ground troops, nothing. So if something were to break out between Russia and Europe, but it stays regional within there, then how do you think markets might react?
A lot of money will come to the United States, because we're the big winner there in that situation, because Europe is not Ukraine. They can reach out and touch Moscow. You know what I mean? They can obliterate every oil refinery in Russia. Okay. And Russia doesn't have the same ability to block missiles as Europe does with the Patriot systems and stuff like that. So I think it'd be pretty ugly. But we would be the big winner in that environment. And look, I don't think Trump's actually opposed to it. I think he's like, hey, you guys want this stuff so badly? Here, I'll give you this war. You can have it. I'll stay out of it. China, he's keeping his eye on the prize. The prize for him is bringing China down a notch or two. Okay, and I think that's where he's focused on. That's why he's getting rid of Iran. He was hoping to cut a deal with Russia. I think he might have to wait till Putin dies. I think Putin's too invested in this. Somebody told me something really interesting. The reason why the Soviet Union collapsed is because they lost the war in Afghanistan. People came home and said, why did we sacrifice for nothing? Next thing you know it, Gorbachev basically dissolved the Soviet Union. If Putin quits now, and look how many people have died, a lot more people than died in Afghanistan, and he's not been able to move the trench lines at all in Ukraine, and he declares a cessation of hostilities, is that he may just get cooed out, right? And if he keeps fighting, he just keeps losing people and material. And if he sucks Europe into this, then he has a big war in his hands, and one that will probably put himself at risk of China coming in and stealing the eastern part of his in Siberia, his eastern provinces. China can easily grab them. So he has a lot of math on his hands, but money will come to the United States like there's nobody's business. Okay. Here's the rule on war. Unless war is on our soil, our stock market goes up.
Yeah, just the technology today is amazing for us to trade in.
It is. And we have enough data that our algorithms optimized. In fact, we're gonna be updating the optimization again here in another month or two to actually add another alert to the system that does exactly what you say. It's multi algorithm confirmations. And it's pretty cool. Some of the trades I put out this week are from that as a test, and we're pretty pleased with it. So we got the buy alert down. We're looking at the sell alert. As you know, people, when you trade, it's easier to find a buy than when to get out. Okay. there are rules that say if things are getting too overvalued, it's like the 7% over the moving average rule. And we have have an algorithm for that, but a lot of that's more art. Remember, bottoms tend to V, but tops tend to U. And so that's why you're always better off looking for V bottom trades than trying to always short the market, because it can take a long time for the market to bend. But when there's fear, like last week, when did that Fed meeting, boom, boom. That's what you look for. And then you can not trade for a couple of weeks and you already made a month's worth of income instead of trying to do a lot of, I'm not trying to guess the top game. It's too hard. I'm bearish the market right now, but all my trades are on the long side pretty much. So I just look for those anomalies, and you're just getting in and out of the trade. I'm not married to anything. I'm not even dating them. I'm just going to get coffee. Okay, that's how fast you have to be right now. But come trade with us. I think you really like it. And just what I put with Dave is really good discounts. You could be in our voice room or you could be in our chat room. But either way, you get access to the algorithm and you get access to my trades. And we answer all the questions. So if you put questions in the room, we answer it, or you can even ask me. When I get off of here, I'm going back in the voice room. People go to say, hey, Bob, I got a question. And as Dave knows, it, we charge for this service is nothing compared to what you get out of it. And we probably way undercharge for what we do, but we're happy with it.
TradeWith2030.com. Hope we answer some of your questions and ideas where the world's going to bend to over the next 30 days and even out into the future. 2026 is something we'll talk about next month. But until then, bye for now.